Selling 10-year France. IDA Global feels that the French bond yields have now declined too far, too fast. At yields close to 2% for the 10-year area, we think that there's very little downside for yields at these levels, and over the next couple of months we can see 250 and indeed 275 for 10-year yields. The story is multifold. First of all, if we get a surprise on the fiscal cliff and it actually hits, then certainly bunds and treasuries will decline further. But yields for France in that environment, we'd suspect that we can probably only get down to 185 or so. That's the most constructive outlook that France faces at this juncture. More likely is that we'll get a fiscal cliff deal. We'll get quantitative easing not only from the Fed, the Bank of Japan, and then followed in the second quarter by the ECB. This is an environment where government bond markets are unlikely to see current yield levels being sustained. It's more likely that we'll see a rotation higher in terms of government bond yields generally. And with the spreads between France and Germany and France and the US now relatively thin, we think that France is actually vulnerable in that type of environment. Worse still, the prospects are that France could look like the UK or Italy this year. Namely, that during 2012, significant fiscal tightening prompted disappointment for the UK, a flat environment, and prompted recession in Italy. We think that the scale of fiscal tightening planned in 2013 for France and the associated strain on the economy is likely to mean a full-blown recession for France. This can dispel the notion of France as a safe haven. The situation that a large buildup of assets in France can continue has to be questioned. Indeed, in the worst case, there is a situation where social unrest in France could actually become a very prominent issue, given the tradition of greater social dislocation, particularly in France and the UK, compared to other European countries. Just to add a bearish tone, the final nail in the coffin is that France could be downgraded in the next 3 months. We would attach an 80% probability to France being downgraded by S&P before the end of the first half of 2013 and feel that there's a very real risk that that could happen in the next couple of months. In that environment, risk-reward favours selling 10-year France, looking for 2.5% yields. This is Mike Gallagher from IDA Global.